Hey everyone, it's Nick with Us vs. Hurt. Thanks so much for joining me today. We post a new video at 3:30 or we go live at 3:30 p.m. Central every day. I want to thank everyone who's live on the stream right now and watch us every day, day in, day out. Couldn't be here without you. Couldn't be doing this without you. If you're not yet a subscriber to our free options trading group, I have the link below. We post our trades in there. Actually, a great community that we're building there. We're almost 300 members strong. A lot of people are posting trade ideas, asking questions. It's just great. I'm having a blast trading with everybody. And what I wanted to talk about today was controlling your emotions. Let's see, I got the chat here. Ovan, what's up? Hey Jeff, what's up? If you're here watching this right now, say what's up. I want to get to know everybody. I want everyone to leave a comment so I know that you're watching and know that I just want to meet everyone that we reach with this channel. Oven, hey Crypto Slice, what's going on? But yeah, we're going live today. I want to talk about controlling your emotions. And one thing with trading, there's a lot of things that you have to balance. Not only do you have the technical side, but there's always the side that you got to be careful. The most vulnerable about is yourself. Now, there's a lot of things that you feel when trading. You feel greed, you feel anger, you feel sadness. I don't ever feel this, but some people feel hate, and anxiety. A lot of different things can happen when you're trading, and you got one of the things that you got to do is kind of put a lid on your emotions. I know it's easier said than done. Ovan's from New York, love our channel. Thanks, man. Thanks, definitely appreciate you. And recently in recent weeks, trading has been tough in general just because of the choppiness to it. Last night we actually, this is SPI, we gapped down on the trade news, and then only to open up, rip up here, SPX only to open up super positive, closed up 0.5% up on the day. Dow was positive almost 200 points. NASDAQ was positive 60 points. I mean, it was crazy. So this is definitely a roller coaster for emotions. You just definitely have to check yourself. One of the examples I wanted to use today was this Tesla trade. I had a vertical put spread on Tesla, and it kind of was reaching up here, kind of giving some back. I actually put a trade on yesterday down here. I had a 295, 292.50 put credit spread, and this morning everything was fine. I actually wasn't at my desk this morning. I was actually, unfortunately I was out and about, and this looked like a really great trading day. I didn't really do too much today just because I was out and about, but Tesla was having a good old time, and then a report came out that they're being investigated on criminal charges due to Elon's tweets about the funding thing, and it dropped. Immediately dropped 6%. Went from gapping up, being above 300 to hitting 275, 276 down here, and this really, if you watched my video yesterday about lotto plays, this is what I'm talking about, which should really get you in trouble. Hey, what's going on, everyone? Love all the comments here. This is really what gets you in trouble here when lotto playing, because you can't see things like, you don't know things like this are going to come out. And Tesla has been doing this very frequently, where it's been subject to this kind of news event. Which is why their IV right now is like 80, super expensive. And, so I was selling premium here, and luckily, like on this event, I didn't really, you got to stay mechanical. Like a lot of people would see their calls get evaporated and immediately feel anger, and then probably would want to, average down on your position. And when there's this kind of volatility right here, option pricing is getting skewed. So when there's volatility like this, quick drops, 20, 25, this is like a $27 drop, $27 drop, almost 10% here from the highs, there's going to be, the option price is going to get skewed. So if you're making a trade during this, and you're watching your money get evaporated, and you're seeing that, it's best just to keep a level head. Like if you're feeling anger and anxiety about a trade that you put on, it's probably because you were trading too big to begin with. Like if you put in, like, let's say $5,000 and then you saw it go down to zero, I mean, you're probably trading too big for your account. If you put a $5,000 trade on here and you have $1 million account and it goes down, you probably won't feel anything. So get to the point in your trading where you don't feel anything, whether you're making money or losing money. I mean, obviously the goal is to make money. It feels good to make money, but also like when I may have a winning trade, it's just I'm on to the next trade. I say, okay, great. If I have a losing trade, I don't really feel anything because I don't ever risk enough to damage my portfolio enough to that would cause a lot of harm here, on a trade like this. Like I had my risk ratio on this trade was 1-to-1. It was like 120 max loss, $130 max. I'm sorry, 130 max loss, 120 max profit on this. And it was next week, and it was kind of a chill trade. I didn't have to exit today. I actually did exit it, but it was only a $20 loser. I was up like 20-30 bucks on it. So, I lost on the day on this trade like 50 bucks, but it was, unrealized. But the actual trade I lost like $24 on. And the reason why I didn't really lose that much is because I didn't have it expiring this week, and also because IV was so high and it was expanding, so that was helping me out. So as a premium seller, expanding IV, definitely helps you out when you get huge volatility like this, even if there is big moves against your position. Just to keep a level head. Let me actually pull up another one that's kind of been a heartbreaker for some people. Yes, you've been making money, but this has been a tough chart here on AMD. So, a lot of people buy calls and buy puts just at the wrong time. So like let's say on, what was this, Wednesday? Let's take a look at Wednesday and Thursday here. Wednesday people were buying calls and they were anticipating some, just went up all day, looking for some continuation. And then the next day just gave them all back. And that kind of thing happened. Like, you got to protect your account. And a lot of people on this, like, greed will start to drive where they didn't take the money here. Greed starts to drive, and you say, okay, well, tomorrow, if it went up $3 a day, why can't it go up $3 tomorrow? Well, look what happened. It gapped up and it came back down $3. Actually went down $4 from its highs. Went back down 10% from its highs, 11%. So, checking your emotions is definitely like the number one thing that you can do as being a profitable trader, like not trading on emotion. Another thing is, like, I notice what people do is like they trade out of anger. So like what they'll say is like, hey, I got this disgusting meal from McDonald's. I'm going to go short the stock. Really realizing that, like, that has no impact. Your bad meal at McDonald's has no impact on a company that large. Like, it's not gonna matter. Like, people message me, do you think that, I was in the store the other day and they have earnings coming up and there was nobody in the store. Do you think that I should short this company? And if you go to the store and there's nobody in there, maybe you just went there at a bad time. Does that mean their financials are bad? Stuff like that. A lot of people trade on emotion when a company does them wrong. So they'll say, hey, I'm gonna, like I was saying, McDonald's, I'm gonna short McDonald's. Like, with your account, you don't have enough money to put a dent into McDonald's stock. Like, if you're Warren Buffett and he got really angry at McDonald's, maybe he could do it, but that'd be really reckless, and I doubt that he would ever do that. And there's those activist short sellers and stuff, but rarely they are right. They just put out a news article and they do what they need to do, and that's pretty much it. If you guys have any questions or want to contribute anything, or leave a comment below, definitely we'll be taking questions here shortly. But that's really what I wanted to get out, was that, when we're having choppy trades such as these, where we're having gap ups and we're having huge days down, like, don't get discouraged. Like, you can see your account from being profitable. Like, I had the SPY call today. It was a small position. I actually put it on yesterday to hedge my long positions. And yesterday it came down. It actually was profitable. I was up about 50% on it. And then it ripped up today and it expires tomorrow. So it was actually I actually wasn't thinking it was going to work out, and then it was. It didn't make me want to go short more. And then, like, don't get discouraged by, like, the tariff wars. Learn how to trade. Learn how to trade this. Like, you can use it to your advantage. Like, volatility and momentum like this, up or down. Two-sided markets is what an options trader dreams of. Like, this is what you want. You don't want to go straight up every day. You don't want it to go straight down every day. Two-sided action is really what you want. And, some of the best examples for that, I know I use Tesla a lot as an example, just because over the year, I mean, it really hasn't gone anywhere I mean, yes, it's down from its highs and everything like that, but really great two-sided action. Yes, I sold my stock back in November, but it's been great trading these options here. Like this has been great. It's definitely difficult to trade like news events though. When things happen to the stock, and did I know that Elon was going to smoke weed and do that kind of thing? Like you don't know that kind of, you don't know what's going to happen, and no one knows what's going to happen to a particular stock, but you got to put a trade on, what you think is right in terms of the technicals. So, rely more on technicals, less on your emotions. Brian and Crypto Slice are addicted to options. Yep. I mean, yeah, you gotta be careful that you don't let the greed drive you. Stay profitable, because what happens a lot of time when I think greed is probably the most powerful, and then like fear, like in this, like people probably definitely panic sold in this and didn't necessarily, like they probably sold down here, they didn't, and it recouped like $10 from the lows here. Panic selling. If you're panicking, you're probably trading too big. You got to be careful. You got to be careful. I love trading options. I trade a lot of options. I trade, thousands of orders a year, and it's great. But you got to be careful also not to overtrade. A lot of people, what they would do on this bar is they would keep shorting it, and then it bounced up and they lose money. It happens. Not saying this is not going to go lower tomorrow, but if you were, like, let's say you're day trading this is not a very good day trading chart. To make money here, you'd have to have puts beforehand, and then it was pretty much flat the rest of the day. Like you had to know beforehand. You had a position on beforehand, and unfortunately, I had a bullish position on beforehand. Lost $20, not a big deal, but that's what happens. For someone that's trading this, and let's say they only have a $200 account, and they lose $20. I mean, that's probably going to be a big deal where you're gonna start to panic. But use another trade to offset your losses. You don't have to take the losses. Play some defense. Crypto, I got my emotion check. I learned that in the crypto market. Yeah. Hopefully, I don't know. Is anyone here still trading crypto? No greed today. Did a credit spread on AMD with 89% probability. Good. One thing I will say about AMD right now, like their IV is pretty high, and sure, they might break new highs, but it's getting the range is getting tight right here. Like it's not going, it's going to either go below 30 or it's going to go above 34 here. Like the range is getting tight. So depending if we're going to have a bearish breakout or a bullish breakout, we'll see. But right now it looks like it is uptrending with the daily lows here on the yearly chart. Looks like it is uptrending. So and then also, like when you're going through some pain moments, does your account have the funds to endure the pain? Because on losing days it's not fun, but everybody has a red day. It's not fun to have a losing day, and you can offset your losses, of course, but eventually you're going to have a red day, and eventually you're going to have like a really red day where you're going to lose 1,000, 5,000, depending on how big of an account you're trading with. That's pretty much all I wanted to accomplish with this video. If you guys have any questions, definitely leave them below. Alex, low return, but hey, cashed out 50% gain in 2 hours. Yeah. AMD, what was AMD doing today? AMD was down almost 2%, but it does look, even though it was down 2%, it had a really solid bounce down in here. This is a really solid bounce down to this 3150 area right here. It's hard to trade these kind of charts because there's no areas of support here. There's nowhere to fall back, but it's also when things run, they run high. When people start shorting stuff like this, that's where you get these short squeezes from. Is if people start piling on short right now, and it continues to go up, or they have a good press release or something good happens, those short sellers are going to get squeezed. Can you explain? Brian says, can you explain again significance of two-sided trading and why it's options trader dream? Let's go back to Tesla, or let's see, is Twitter another one? Not great. Or Facebook is another one. Well, Facebook, let's use Tesla for an example. Anyways, so what you like about it is because you can play both sides, or at least this is what the way I like to do. You know, everyone has a different style of trading. What I like to do in a two-sided market is play both sides. So I don't really necessarily have an opinion. You know, I hope the best for Tesla. I hope it does well. I will go along like today. I closed a bullish position. But I will short Tesla at any given time. And one of the things is here, you can kind of see what's nice is, you know, nice indicators here at 360. You know, back in October, it hit it, fell, came back up here. In January, hit 360, fell, came back up here at 360, fell. And then also the opposite works here. You know, back down in here, built some support down in the 300s. You know, 310 area support, bounced up, hit 360, came back down, hit 300, 310, run back up to 360. You know, definitely what makes it difficult, the two-sided market, is this kind of thing. So what I like about it is the stock goes nowhere. Yeah, you can do like iron condors and stuff, but I prefer to take a bullish or bearish position on stocks like this because the volatility is so high that you know, it does decrease here, but right now I don't know. You don't know when volatility is going to die down, so it eventually will die back down. So actually, I wouldn't put an iron condor, for me personally, I wouldn't put an iron condor down here, mainly because like this 275, 280 level, it's just bounced too many times. So, you know, the 285 to 360 area, it's just been a dream. You know, when it falls low enough, you know, you put a bullish position on. When it goes too high, like 360, 380, you put a bearish position on, and you know that's been right all year long. Now that could eventually be wrong, so that's why the more times that you're right. And this is where checking your emotions are. The more times that you're right about a stock, like I've traded this very successfully this year, the more times that you're right about a stock, you got to be careful not to like load up. So let's say, okay, I sold one contract this time. Okay, I made $100. Okay, next time I'm gonna do 2 contracts and 3 contracts and 4 contracts, and then like the 5th time that you do it, let's say it breaks up all. Let's say you were shorting here at like 360. You know, let's say I was shorting here at 360 because you're like, hey, 360 was the area last time, and it shoots up to 380. You know, you just snowballed all your profits into one huge loss. So that's one of the things that you got to be careful about. Ovan says, "What's up with TLRY stock 160?" So I talked about it before. I think someone commented me earlier about some wheat stocks here, and what I don't like about trading any of the wheat stocks, TLRY, CRON, you know, any of those guys, is that they're crowded trades. And what I mean by crowded trades is, oops. Okay, today actually these are actually looking pretty right. So TLRY, these are up to, you know, 1,900%. Actually, was not expecting that. But typically, what I've been seeing in these like CRON and TLRY is like it was taking a 10% move. Well, it was a 30% move here, I guess. Wasn't expecting a 30% move, but typically what I've been seeing for TLRY and CRON in them is that it would take a 10% move for you to make 100%, and these options were super expensive, and in my opinion, I find it way easier to make 100% elsewhere in the market. So I have nothing against the stocks. I have no idea where they're going to go. You know, that's a pretty amazing run, 20 to 160 in a few months. I mean, that's just nuts. But eventually, like I said, FOMO will die down, and right now, to me, it's a crowded trade. Yes, you can make a lot of money. I probably could have made a lot of money in here today, but I personally don't like to trade. I personally don't like to trade these. You know, this was a 13% move. There was 300%. Let's see what CRON looked like. Plus, I don't really like trading these like single-digit stocks, almost like $11. I don't really like trading options on that. If you're going to do anything, I would probably own stock. I would probably buy stock. But for me, it's just way too choppy. Like, I don't understand where the stock is going to go. Is it going to come back down to 6? Is it going to come back to 15? So, like, to protect my account, I typically don't trade stocks like this. Gold, 350, 3584. What's going on, man? How much can we earn with dividend stocks? I guess it depends on how big your position is on the dividend stocks. Appreciate you guys. You know, definitely appreciate everyone joining in these live streams. You know, it really means a lot. Actually, when I first started out, I didn't think anybody would want to watch these videos. But if let's go back to CRON here actually. If you bought it here and you thought, went from 7 to 12 and it ripped up and then it came back down to 5, I mean, that's really painful for your account. Like, especially if you're lower than boat. I guarantee a lot of the people that are trading these are trading really big because of the gains that they've been making. What's the worst feeling in the world is when you make a lot of money in the market and you give it all back and then you actually go negative. That's probably the worst feeling trading ever. And if that happens to you, like if it's happened to me, like, stop trading for like 3-4 days. Like, you don't go, that's why you got to check your emotions. Like, don't go into a trade. Thoughts on 2020 AMD. Air LeBron, thoughts on 2020 AMD calls for 60. Let's look that up. AMD 2020 60 380. Let's see here. Yeah, I mean, if you're long-term bullish on AMD, it might not be a bad position. The one thing I would say though, IV's high right now for buying premium, especially far out. Like, IV is going to come down eventually. Whether it's, I know they have AMD has earnings in October, so I don't think we're going to have an IV crush until then, unless we get some flat action. Like, if AMD stays at 31 for the next week or stays at 32 for the next week, IV is going to die down. I definitely would get a better deal on buying like long-term options, because let's say it stays the same right now, like 32, and IV dies down. This $60 contract's now $380 is probably going to go to like $2, $2.50. Just to give you a heads up. Buying premium right now is going to be difficult for you. Can you make a lot of money on yearly contracts? Yes, but you have to catch the moves. Like, people that had let's say an AMD here, they had, let's say, the $20 strike for AMD back down here. Actually, let me make myself a little smaller here so you can see the chart better. If you're looking at AMD here, it moves sideways like all year long. Like, all year long, we're going, between 9 and 12 and 14 and 9 and 10 and 9. Like, very boring trading here. And what that is going to happen is that the contracts, when you have boring trading like this, contracts out here, like far out of the money, these are going to be super cheap because they're going to be like, hey, there's no volatility right now. There's no reason for it to go up. So, they're going to be undervalued. And no one saw that a huge move like, from 10 to 30 is going to happen in like a couple months. So now the trade's getting kind of crowded here. You can see the volume on, actually still too long, but there's a lot of volume here. I mean, some of these were, 1,200 today, 900 today, 1,100, 500. So on the yearly contracts, there's definitely volume there. You just got to be careful. Right now, for me, IV is kind of too high to buy. Like, long term, I would wait for it to level out. If you're going to buy something in 2020, for me, I'd wait for it to level out, like it did down here in the 18s, and then load up, because you need volatility. Because if you see down here, back in January, after it spiked up after earnings and then it went flat, you can look down here how flat IV was going here. Like, look how flat IV here. So those contracts are going to be nice and cheap for you. Right now, you can see IV through the roof, expensive. So gold's got AMD expiration 21st, 35, 36, 3650 calls. I need to understand IV more. I think, like, as traders need to understand pricing better. Because that will help you. Yeah, you definitely need to understand IV, but also understand like theta. Like, people were messaging me like, hey, I have an option. It's near the money. It was up a little bit of money, but then tomorrow the stock's the same. It expires Friday. The stock is the same price, and now I'm down money even though it's a little higher. And that's because theta just ripped through that option. So the closer that you get to expiration, the more riskier it gets, because if you're really just at the money there, you're going to be losing money, because even though the stock's not doing anything, maybe you're even in the money, they're just going to rip that up. They're just going to rip that apart, because the probability of it being in the money at expiration, decreases as it gets closer to expiration. The more it's riding right at the money or near the money there. Oban, agree, they are so expensive. So that's pretty much it, guys. But I definitely appreciate everyone that's commented. Great questions today. Hope to see you guys tomorrow. Thanks so much for tuning into Us versus Herd. It's always Us versus Herd. If you want to join our free options trading group, the link is below. Definitely hope to see you all in there. Thanks.